Profit and loss. This very concept runs our economy. Every trader or businessman wants to earn profits and tries very hard to keep away the losses from his company. We are not going to discuss about the strategies one should follow to attain profits, but will engage ourselves with the questions like what is cost price, selling price, profit, loss, profit percentage, loss percentage, marked price, discount, break-even point, and the relation between all these terms. We will solely deal with the calculation of profit, loss, cost price, selling price, loss percentage, or the gain percentage incurred during a transaction. So, let's get the basic understanding of all these terms. So, before we go into what is profit and loss, it's important for us to understand the distinction between who is a buyer and who is a seller. In any of the transaction between two persons, the person who buys any product and gives money in return to the other person is known as a buyer, and the person who sells his product to the buyer is known as a seller. So buyer takes the product and gives money to the seller, and what a seller do? He sells his product and gets money in return. So this is the basic difference between a buyer and a seller. Now, let's try to understand what is cost price. It is the price at which a person buys a product. It is the amount paid in either purchasing or producing an object. So, what is a cost price? Cost price is the price at which a person buys any product. It can also be the amount paid in either purchasing or producing an object. The cost of procurement of any object is known as the cost price. Let us take an example. In this case, we have a boy who wants to purchase these fruits from the seller. So, this boy becomes the buyer and this man becomes the seller. This boy is going to pay the price of these fruits. He pays it to the seller and he'll get fruits in return. So, this price or the amount paid by the buyer to the seller is known as the cost price. So, the price at which this boy buys this basket of fruits is known as the cost price. So, the amount paid by the buyer to the seller in procuring any product is known as the cost price. Now, what is the selling price? It is the price at which a person sells a product. It is the amount received in selling an object. So, selling price is the price at which any person sells his product. It is actually the amount he receives in selling his object. Let's take the same example of the boy and the seller. Here, the boy is the buyer and he is the seller. Now again, the boy pays it to the seller and he gets the fruits in return. Now this money which the seller gets is the selling price. So we see that this very amount which this man will receive in return for the fruits he offered is the selling price. So finally we can say that this very amount is the cost price for this boy, but for this man it is the selling price because it is the price at which he is selling his fruits. So that's the basic difference between what is cost price and what is selling price. So cost price is the price at which the buyer buys his product and selling price is the price at which the seller sells his product. Now let's see what is profit. If the selling price is more than the cost price of an article for the same man, then we say that the profit has been earned. So, if the selling price of any object is more than the cost price of the article, then we say that profit has been earned. The condition for profit is that the selling price should be more than the cost price. And this difference between the selling price and cost price is known as profit. So simply, if the selling price is more than the cost price, then we say that profit has been earned, and this profit is the difference between the selling price and the cost price of the same object. Let's see what is loss. If the selling price is less than the cost price of an article, then we say that loss has been incurred, and this difference is known as loss. So on the other hand, if the selling price of the article is less than the cost price, then we say that the seller has incurred a loss, and this loss is given by the formula CP minus SP. CP is the cost price of the article and SP is the selling price of the article. Now let's see the next concept, which is profit percentage. Now What is profit percentage? It determines profit not just in absolute rupee terms but in terms of percentage. So this is a way of expressing the profit in terms of percentage. So profit percentage does not represent the absolute profit. It actually represents the profit in terms of percentage. And this profit percentage is given by the formula profit percent equal to profit divided by CP into 100. So profit percentage would be equal to profit divided by the cost price of the article into 100. Please remember, always the profit percentage is calculated taking CP as the base, and CP is the cost price of the article. Now we also know that profit is equal to SP minus CP. So we can write this formula in another manner as profit percentage equal to SP minus CP divided by CP into 100. Your SP is the selling price, CP is the cost price of the article. So this is what is profit percentage. Now let's see what is loss percentage. It determines loss not just in absolute rupee terms but in terms of percentage. So it's just like the profit percentage. Instead of profit, there is a loss. So whenever we have a transaction in which loss incurs, then we can calculate the loss percentage in terms of CP. And this is given by the formula loss percentage equal to loss divided by CP into 100. So loss percentage is again expressed in terms of CP as loss divided by CP into 100. Also we know that loss is equal to CP minus SP. So we can replace loss by the expression CP minus SP. So loss percentage equals to CP minus SP whole divided by CP into 100. Again the base has to be CP, which is the cost price. Now we got to remember something, and that is profit percentage or loss percentage is always calculated on CP. That is, the base or denominator is always taken as CP unless otherwise stated. So whenever we talk of profit percentage or loss percentage, it has always to be calculated taking CP as the base, not SP. So we take the denominator always as the CP. First of all, to calculate the profit percentage or the loss percentage, we calculate the loss or the profit that has been occurred. We divide it by CP and we then multiply by 100 to get the profit percentage or the loss percentage. Always take the base or the denominator as a CP. Now let's see an example. Why do we calculate profit or loss in terms of percentage? What is the significance of this? Let us say that we have got two deals. This is deal A and this is deal B, and there are two houses. Now let us say that the CP of this house is 2 lakh rupees and the CP of this house is 1 lakh rupees. Let us say that this house is sold at an SP of 3 lakh rupees, and let us say that this house is sold at SP of 2 lakh rupees. Now what we see? We see that the profit in this case is 1 lakh rupees, and also the profit in this case is equal to 1 lakh rupees. The profit in both the deals is the same. But then how to distinguish which deal is better? Deal A or deal B? Or is it that both the deals are equally good? For that, what we'll do is we'll calculate the profit percentage occurred in both these deals. So in this deal, profit percentage would be 1 lakh divided by 2 lakh, which is the CP into 100. And similarly, the profit percentage for this deal would be 1 lakh divided by the CP, which is 1 lakh into 100. In this case, the profit percentage is 50%, and in this case, the profit percentage is 100%. So now what do you think? Which deal is better? Of course, deal B is better because here the profit percentage is 100%, which is twice the profit percentage occurred when we took deal A. You can also think it this way. Here the investment that has to be made is less. It's 1 lakh rupees, and in this case it is 2 lakh rupees, and both these deals generate the same profit. So to identify which deal is better, we always calculate the profit percentage. It is also known as the return on the investment. How much amount you are getting in return to the investment you have made. So profit percentage helps us to identify which deal is better. Now also why we have emphasized so much on the base, because clearly you can see that the profit percentage differs in both these cases just because of the CP, which is the base. Now we've seen that the formula for calculating the profit percentage is equal to SP minus CP divided by CP into 100. Now, we can write this as P by 100 equal to SP minus CP divided by CP. Further, this becomes CP into P by 100 equal to SP minus CP. Or further, we can write this as SP equal to CP into 1 plus P by 100. So, this formula helps us to calculate the SP when we know the CP and the profit percentage that has occurred. So SP is equal to CP into 1 plus P by 100, where P is the profit percentage that has occurred, CP is the cost price of the article, and SP is the selling price of the article. Loss percentage L is equal to CP minus SP divided by CP into 100. This is the formula we have already studied. Now we can further write this as L by 100 equal to CP minus SP divided by CP. This becomes CP into L by 100 equal to CP minus SP. Or further, we can write it as SP equal to CP into 1 minus L by 100. Here L is the loss percentage, CP is the cost price of the article, and SP is the selling price of the article. So whenever we have a profit, then SP would be equal to CP into 1 plus P by 100, where P is the profit percentage, and in the case of loss, SP would be equal to CP into 1 minus L by 100. Here L is the loss percentage. Clearly, you can see that if we have a profit, then SP should be greater than CP. Now this term 1 plus P by 100 would always be greater than 1. Therefore, we get SP greater than CP. And in case of loss, SP would always be less than CP. Now if we look at this term 1 minus L by 100, now this term is always less than 1, and so their product would always be less than CP. Thus we get SP greater than CP in this case, and SP less than CP in this very case. And this is an important formula to remember. Your P is the profit percentage and L is the loss percentage. Let's see what are the different types of cost. There are actually two types of cost. The first is the direct cost and the second is the indirect cost. Now what is the direct cost and the indirect cost? Let's try to understand that. Direct cost or the variable cost. Direct cost is also known as the variable cost, and what exactly it is? This is the cost that is directly related to the product. It varies with every unit of the product manufactured. So this is the cost that is directly related to the product. So it varies with every unit of the product manufactured. So this cost is directly proportional to the number of units produced. So we can say that this cost, the direct cost, is directly proportional to the number of products manufactured. For example, let us say that the cost of manufacturing of this football is 100 rupees. Now, if we produce 2 footballs, then what would be the cost? It would be 200 rupees. So we see that the direct cost or the variable cost is directly proportional to the number of units produced. So in this very case, we see that if 1 unit is produced, the cost is 100. If 2 units is produced, the cost is 200. If 3 units are produced, the cost would be 300, and so on. So direct variable cost is directly related to the product. So we clearly see that if the number of products are more, then the raw material required to manufacture them would also be more, and so the cost of raw material would also be more. So a component of direct or the variable cost is the raw material. The other is the wages. If wages are provided in such a way that it is measured with respect to the number of units produced, then again this would come under a direct or the variable cost. So if the workers are paid according to the number of units produced, then again it would be a case of direct or the variable cost. Now what is the indirect or the fixed cost? This is the cost that is unrelated to the number of products manufactured. It is a fixed cost irrespective of the number of units manufactured. So what is the indirect or the fixed cost? This is the cost which is unrelated to the number of products manufactured. It remains fixed and it does not depend on the number of units manufactured. For example, the salaries of executives. So whatever is the number of units produced, the salaries of the top executives would always remain the same. The phone bills that occur in an office, these are a component of fixed cost. Now these bills do not depend on the number of units manufactured by the company. Similarly, if you look at the rent of the office space, rent of the buildings, these are fixed costs. They do not depend on the number of units manufactured by the company. So all these are some of the components of indirect or the fixed cost. Now, always remember, variable cost plus the fixed cost gives us the total cost. So if we are to focus on the total cost, then the total cost would always be equal to the variable cost and the fixed cost. Fixed cost remains the same, the variable cost directly proportional to the number of units manufactured. The total cost is equal to variable cost plus the fixed cost.